Every time you use Claude to execute finance work, there are manual steps that happen before the actual work begins. So you export data from this system, you pull data from that system, and you pull a report from that one over there, you reconcile the numbers in a spreadsheet, and then finally your real work can begin. Now, the analysis here is not the actual problem, it's the lack of automation that's the problem. So what I built is a system that eliminates all that gathering work entirely. And the system I built, it connects the data sources once, and then Claude runs the analysis on a schedule, and a leadership ready executive dashboard lands in the project folder every Monday morning without me touching anything. So I'm going to show you how to build it step by step. Now, if you want the prompts and the instruction files from this video, they're in my free community. Link is in the description below. And for now, let's get into it. Connecting the data sources. The first thing I do is I open Claude and I go to the left sidebar and I click on Customize, then I click on Connectors, then the plus icon, and I select Browse Connectors. And then I search for coupler.io. I select the one with the black icon, I click Connect, then I complete the authorization, and the connector then appears in my active list. Now, the whole system depends on one thing: fresh and connected business data. So if you're manually exporting CSVs or uploading files into Claude every week, then you have already lost the automation. Coupler is the layer that removes that problem. So it's a no-code data integration platform that continuously pulls from your business systems and makes that data available to Claude directly. It supports hundreds of sources, including QuickBooks, Google Sheets, Airtable, Notion, Salesforce, Xero, and most of the tools finance teams actually use. Now, the data flows on a schedule, it gets standardized, and it lands in one unified layer that Claude can query without you having to prepare anything. So for this workflow, I'm connecting 4 different sources: QuickBooks Online for financial performance, Google Sheets for weekly operational metrics, Airtable for the strategic project portfolio, and Notion for executive initiatives. Each one covers a different layer of the business, and the system analyzes all 4 together rather than treating them as separate reports. Now I go into the Coupler.io workspace itself to connect the business sources. I navigate to sources in the top left panel and I search for each system. Airtable connects via shareable view link, so I paste the URL and I confirm access. QuickBooks, Google Sheets, and Notion each use direct account authorization. I authorize each one. I select the specific data I want to synchronize, and then I set the destination to Claude. Now, once I click Save and Run on each flow, Coupler then processes the data and makes it available inside Claude. Now, one important distinction about how Coupler works is important for me to mention. The AI does not connect directly to your operational systems. Coupler acts as the controlled access layer between your business data and Claude. And you decide which data sets get exposed, how they're structured, and what gets analyzed. Now, the governance layer matters when you are working with financial information. It's essential. Now, from this point on, the business data updates automatically in the background. Now, I'm not exporting anything, I'm not uploading anything, I'm not preparing anything before each run. Coupler handles all of that. Building the intelligence layer. Connecting data is only one part of the setup. The other part is making sure that Claude analyzes it consistently every single time. Now, without a defined framework, Claude behaves like a general assistant. It might structure one week's report differently from the next. It might focus on different metrics, or it might even miss connections between the financial and the operational data. Now, for a weekly automated workflow, that inconsistency breaks the point of having a system. It makes it useless. So to solve this, I create an instructions file. Now, this is the operating manual for the entire workflow. It defines Claude's role, the reporting scope, the data retrieval rules, the analysis structure, and the output format. Every time the scheduled task runs, Claude reads the file before doing anything else. Now, the file positions Claude as the finance operations analyst for the business. The framing matters here. It's not acting as a general assistant answering questions. It is operating as an analyst with a standing brief, retrieve the latest data, validate it across all 4 business domains, analyze performance, identify risks, and produce an executive dashboard. The data governance rules in the file are very specific. Coupler IO is designated as single source of truth. Claude must always retrieve data through Coupler first, retry if a dataset fails to load, and never silently skip a required domain. Now, if a source comes back incomplete, the file tells Claude to flag it and attempt recovery before proceeding. Now, the retry requirement is not optional. If Claude were allowed to proceed on partial data, the report could reach wrong conclusions without signaling anything was missing. The reporting logic requires Claude to connect the 4 domains together rather than analyze them in isolation. Now, financial outcomes need to connect back to the operational performance. And operational performance needs to connect back to project execution. And project execution needs to connect back to strategic initiatives. Now, that chain is what turns 4 separate reports into a single coherent business narrative. Now, one rule in the file is especially important. Every report must be treated as a completely new reporting cycle. Claude is not allowed to reuse an old report or carry last week's conclusions forward. Now, if it could do that, it would quietly recycle stale numbers and you would never know that the analysis was out of date. Running the first report. Now, with the data layer connected and the instruction file written, I now create the Claude project that will serve as the permanent home for this workflow. I go to the left sidebar, I click Projects, and I select New Project. I then choose Start from Scratch and name it Automated Finance Operating System. Now, inside the project settings, I paste a short version of the operating framework into the instructions field, telling Claude to use Coupler as the primary data layer, always retrieve the latest reporting period, and treat every run as a new cycle. Now, the detailed logic lives in the instruction file so that the project instructions just serve as a high-level reminder. I then go to Add Files and I drag the instruction files directly into the project. Now, Claude now has permanent access to the full operating framework every time this project runs. Now, with the project configured, I open a new task and submit a short prompt telling Claude to generate the latest weekly finance operating review using Coupler to retrieve all available business data sets and produce a professional executive HTML dashboard for CEO, CFO, and COO level review. Now, the prompt is short because the instruction file carries the logic. And Claude here reads the operating guide first. It builds a structured execution plan and then moves through the workflow in phases. It discovers the available Coupler datasets. It triggers refresh requests across all 4 sources. It inspects the schemas to identify which datasets belong to which domain, and then begins retrieving data domain by domain. Now, once all 4 are loaded and validated, it identifies the latest reporting period and then builds the analysis. The cross-domain analysis is where the system really earns its value. Claude does not report financial results separately from operational results. It evaluates how the 2 interact. When operational metrics deteriorate, it checks whether project delays contributed. When project execution breaks down, it traces which strategic initiatives are behind schedule. And then the final output explains not just what happened, but why it happened across the business. Now, the report opens with an overall status banner and an executive summary. And for the week ending June 1st, 2026, the status reads critical. The executive summary identifies 4 simultaneous operational disruptions, including a fuel price shock, driver shortages, vehicle failures, and a routing system outage. Now, revenue finished 30.6% below target. Claude connects this directly to the delayed strategic projects that were designed to prevent exactly these operational vulnerabilities. The KPI dashboard shows 12 indicators. The KPI cards make the damage readable in seconds. So fleet utilization fell from 86% to 63%. Customer churn jumped from 1.4% to 4.8%. Delayed deliveries tripled from 7 to 21. And so on. The financial section surfaces something important beneath the revenue shortfall. A June invoicing event recorded 1.13 million in revenue, but none of those receivables have converted to cash. Accounts receivable sits at 1.32 million with 0 collected. The dashboard separates booked revenue from available liquidity, which is the distinction that matters when you're making decisions about cash. The project portfolio section is where the output does something that a manual report rarely does. Claude does not just list project statuses, it maps each delayed project to the specific operational failure it contributed to during the reporting week. So fleet optimization links to the fleet utilization collapse. Vehicle maintenance overhaul links to vehicle breakdowns. Warehouse expansion links to capacity constraints. Dispatch system upgrade links to the routing outage. The portfolio goes from a progress tracker to really an accountability framework. Now, executives can see the financial cost of delayed execution in specific terms, not as a separate project update. The strategic initiative analysis takes this one level further. So it groups the project failures into strategic pillars, and then it shows which areas of the business are succeeding versus exposed. Fleet and asset reliability is exposed because the infrastructure projects are delayed. Back office transformation is succeeding because those projects are already complete. So that comparison is what leadership actually needs when deciding where to focus attention and, importantly, where to focus capital. Now, the recommended action section organizes priorities by timeline and ownership. So immediate actions cover customer retention, emergency staffing, and collections. Near-term actions address fuel hedging and hiring recovery. Medium-term actions focus on accelerating the delayed project portfolio before the same vulnerabilities create another crisis. And each recommendation connects back to a specific finding earlier on in the report. Nothing in the action section is generic. Automating the system. Generating the first report manually proves the system works. The scheduled task is what makes it run without me. So inside the project, I go to the scheduled section and I click the plus icon to create a new task. I then name it Weekly Finance Operating Review. And in the description, I note that this generates the Swift Logistics Weekly Finance Operating Review every Monday morning using the latest available data. The scheduled task prompt is longer than the one I used manually because this runs without oversight and it needs to carry the full operating logic on its own. It tells Claude to pull fresh data from Coupler, build a brand new report each run, and then validate the data before analyzing it. Now, the last rule is worth pausing on. Claude has to confirm it picked the right data set before it touches anything. It cannot just grab the first sheet that matches. If it picks the wrong one, then the whole review is built on the wrong numbers and it will still look completely normal. Now, you'll see exactly why that matters in the next step. On the right, I pick the model, Opus for complex analysis, Sonnet for regular daily work, and Haiku for quick, simple responses. Now this run reasons across 4 systems at once, so I go with Opus. I set the frequency to weekly, Monday at 9 a.m. Then I link the task to the project so every run inherits the instructions file and the connected data, and then I click save. Now the scheduled task is now active. Every Monday morning at 9 a.m., Claude enters the project. It retrieves the latest business data through Coupler, validates all 4 domains, identifies the newest reporting period, builds the analysis, generates a new HTML dashboard, and saves it to the project folder. Now, the only thing I do is make decisions from the output. Now, setting it up is one thing, but whether it actually notices new data is another. So I tested it. Testing the system. To test this, I add a new reporting week to the weekly operations dataset in Google Sheets. And up to this point, the latest available period was the week ending June 1st, 2026. So I insert a new row for the week ending June 8th, 2026 with updated operational metrics, customer activity, fleet utilization, and management commentary. Then I return to the project and I click Run Now. Now Claude restarts the workflow from the beginning. It connects to Coupler. It scans all all available data sets and it begins evaluating which one is the correct weekly operations source. It does not simply grab the first Google Sheet dataset it finds. It evaluates multiple candidates, compares row counts, and identifies that the 13-row dataset is the live operational source rather than a 234-row sheet that turns out to be unrelated test data. The validation logic is working as intended, so that's exactly what I wanted. Now, once it confirms the correct source, it detects the new row immediately. June 8th, 2026 becomes the active reporting period. Claude does not carry the June 1st analysis forward. It just frames the comparison correctly. June 1st was the crisis week and June 8th is the recovery week. Now, the system refreshes all 4 domains. Airtable and QuickBooks load cleanly. The Notion dataset returns incomplete metadata on the first attempt, and then rather than proceeding with partial data, Claude retries multiple times as the instruction file requires. Claude generates a new file named Weekly Finance Operating Review 2026-0608. The previous June 1st report is untouched, but both files sit in the project folder as independent records. Now, the June 8 dashboard tells a completely different story. Revenue recovered to 228,500, a 56.8% week-over-week increase, and performance above target. Fleet utilization climbed from 63% to 88%. Customer churn dropped from 4.8% to 1.5%. Support tickets fell from 56 to 15, and delayed deliveries fell from 21 to 4. The status indicator no longer reads critical. It reads back on track. One thing here, the report does not stop at the recovery metrics. Claude identifies that the operational rebound was driven by management intervention and emergency staffing, not by completion of the delayed infrastructure projects. So 6 of the 15 portfolio projects remain delayed or at risk. And the symptoms cleared, but the root causes are still there. And so that distinction is what separates an executive level analysis from a simple status update. The report is essentially telling leadership that they recovered from this crisis, but the same vulnerabilities are still in place for the next one. The financial picture carries a different kind of risk from the previous week. All 151 QuickBooks invoices totaling 1.32 million in accounts receivable remain fully outstanding and overdue. Operations recovered, cash collection did not though. Claude elevates receivables as the primary executive risk for the June 8th report, above the operational recovery metrics, because that is the correct prioritization given what the numbers are telling us. Now, the business is billing successfully, but it's not collecting successfully. And those are different problems and they require different actions. The quarterly context in the June 8th report is another strong moment. Claude calculates that total quarterly revenue reached 2.327 million against a target of 2.35 million, meaning the company finished at 99% of plan despite the crisis week. And that reframing changes how leadership should interpret the quarter. Now, one crisis week caused almost all of the variance. The commercial model is still working though. So that is the full system. The data sources connect once through coupler. The instruction file tells Claude how to operate. The project holds it all together, and then a scheduled task runs the review every Monday on the latest data. Now remember, if you want the instruction files and the prompt templates from this video, they're in the free community, which is linked in the description below. In the meantime, have a good one, and I'll see you in the next one.